So in fact, your Nifty, in terms of average valuations, we're very close to average valuations, maybe even marginally lower than average valuations. The mid-cap and small-cap index always trades higher than the Nifty in terms of earning multiples. And even there, we're close to average valuations, maybe in small-cap a little higher. But I think no way are we in those red zones that we've seen in the past. So if someone does want to do those, they can do those. Even debt investors can be a little aggressive now because bond yields are where they are. They're expected to come down.
Okay.
So these tariffs that we have also have a lot of exemptions. So the US has a huge lobby for telecom, for Apple products and things like that, for example. So they've managed to get that exempted. Our pharma is mostly generics, right? And he's put the tax on branded pharma. So that is exempt. And so I think the impact more than GDP is on a few labor-intensive industries. And because they're labor-intensive, I think many people's lives get impacted. You know, things like textiles, gems and jewelry.
Hi there, welcome to Market Pillars Uncovered, an educational series where we get you some of the top market veterans. On today's episode, we have Ankit Patel. He's the co-founder of Arunasset Investment Services, and he'll be joining in to talk about his outlook for the markets, his investment philosophy, NRI investing, wealth building, and more. Arunasset Investment Services has been providing investment management services and wealth solutions over the last 9 years, managing over 500 crores in assets. So let's get straight to it. Okay, thank you so much for being with us on Market Pillars Uncovered. So much to uncover with you today, but let's start off with the broad picture. Where does India stand right now in terms of the economy? What is your projection by 2030?
So I'll give you a slightly short-term view and then we move to the 2030.
Okay.
I think the theme that's going to play out in the next 1 year is reflation.
Okay.
So our nominal GDP is simply too low, right? Because of low inflation. So I think our policymakers in the last few years got inflation targeting a bit wrong. We've been too hawkish and October's number was 0.25%. And I think if you remove the impact of gold from CPI, you're going to have something close to zero. And nominal GDP is important because the government might miss its fiscal target because nominal GDP is too low. Wage increases is vis-a-vis nominal GDP. So that is a theme that I think will play out in the next 1 year. They've already cut interest rates by 1% earlier this year. We've had the tax cuts, GST cuts. We also had a bit of an income tax cut in the beginning of the year in the budget. They modified the tax slab a little. So I think those measures will continue. And those measures are powerful for the market. They're positive. They're the opposite of what you do when you want to control inflation, right?
Yeah.
So I think that is the near-term theme. In the medium term, I think India has its demographic dividend. We have our average age of 28. We have an aspirational population. They're all connected. And I think that will play out in the medium term. So I think the next 12 months are going to be much better than the last 12 months. And I think in the medium term, some of the advantages that India has will play out.
Okay, that's interesting that, you believe that that the forward-looking metrics are looking pretty optimistic. So in light of this, I'm sure that there are a number of sectors that you've nailed down that you believe investors can really benefit from. So which top 3 sectors would you pick?
So I'll tell you what, again, in the near term, I think consumption is something that will benefit from reflationary measures. I also think they've focused a lot on investment in the last 4 or 5 years, right? And when that shifts a little more to consumption, I think that will definitely benefit. I think financial banks and I think financial services will do well. So we've all seen numbers of SIP books going up and people opening demat accounts, etc. So companies doing financial services will do really well. Banks will do really well. Insurance companies will do really well. And my third sector would be technology.
Okay.
So technology, again, let's look at it India and the world type of thing. And what's happening right now is we're laying the pipelines for AI, right? By building all that processing power, your data centers, etc. And whenever historically they've laid the pipelines for something new, it's changed the way we live and it's changed the applications that you have. For example, when we laid the pipelines for telecom and data, we got a Netflix. And because of a Netflix, you got so many shows, you got people getting jobs. A lot of people talk about jobs, people losing jobs because of AI. But when you get the applications, once the pipeline is laid, is when you get the huge explosion. So I think that is a theme that will play out in India and around.
So you're saying consumption, banking and financial and
technology,
tech.
Yes.
Okay. Would there be any niche sectors? And, if I were to follow up, are you not worried that tech would make some of the companies who are not adapting to AI redundant?
Yes, of course.
Yeah.
Definitely. So, couple of things. Again, sorry, I'll go back a little.
Yeah.
When you have a new technology like this, the people who lay the pipelines don't necessarily make money. And we saw that with telecom. We had the applications around it. And companies, once the pipeline is laid, companies that can't use or can't adapt to the new applications that come around it will definitely suffer.
Okay.
Yeah. So there will be a transition period.
Right.
Yes.
Do you have any other niche sectors, maybe something that's a bit of a dark horse that no one's looking at?
In India, I think defense.
Okay.
Yeah.
Defense
really.
as a space. Yeah. But it's
Because
already run up quite a lot.
Yeah, it has, but I think a bubble sort of happens when you don't have numbers that match the valuation. But right now, defense companies, I think new people are going to come in, new technologies are going to come in. So defense, yes, some of them, there is a bit of a valuation concern because of what's happened in the last few years. But overall, I think there's a bit of a runway there, definitely.
Okay, interesting. And so when you're looking at sectors such as this, consumption, banking, defense, etc., are you saying that I'm going to stick with the large cap names? Are you saying that it's interesting to even look at mid caps, small caps as well? What's your thesis?
That doesn't matter. Depends on the company. So I don't think that matters.
Everyone's giving me that answer. Yeah.
But since everyone gave you that answer, I'll give you a bit of a different one as well. So if you divide the three, mid, small and large, and if you look at the standard deviation of a large cap fund or the Sensex, it's going to be lower than mid cap. So small cap has the highest standard deviation.
Yeah.
And maybe the highest returns. And it's the opposite for large caps.
Ankit, let's understand a little bit more about what you're doing. There's Arunassets, which you're at the helm of. What is the investment philosophy and how is it that you're helping clients? So
Arunassets started... See, the insurance industry opening out in 2001 was the start for all of us, I think, So my father, who's my co-founder, became an insurance agent a few years after this, after 2021. And then I started in 2029. I did something called CFP.
29?
Pardon me. I started in 2009, I did something called CFP.
Okay.
And there were just a few hundred then. That was my entry into this field. And what we do is we help people allocate money. We help understand client needs and we match and we understand market cycles and we need to make the two meet. So understanding market cycles is also very important. So even if a client wants to be aggressive, but you mentioned small, mid and large. But if it's not the time for small caps, as maybe I'll give you an example in the last few years. In 2017, the small cap index had a run up to 75, 80 times, right? And if I had an aggressive investor, even though he wants to be aggressive, I have to sort of match what's going on in the market. So very simply, that's what Arunasset.
So where are we at in the market cycle today? If someone's coming to you now saying, hey, I don't mind putting my money in some of the mid and the small caps. I have X amount to allocate. I'm a fairly risky investor. What would you say?
They're not over. Definitely not. So in fact, your Nifty, in terms of average valuations, we're very close to average valuations. Maybe even marginally lower than average valuations. The mid-cap and small-cap index always trades higher than the nifty in terms of earning multiples. And even there, we're close to average valuations, maybe in small cap a little higher. But I think no way are we in those red zones that we've seen in the past. So if someone does want to do those, they can do those. Even debt investors can be a little aggressive now because bond yields are where they are. They're expected to come down.
Okay.
The only place I'd be a little cautious, I'd say gold and silver, it's a time to accumulate and not a time to expect strong returns in maybe 2026 and 27, because both of these work in spurts, right? And we've just seen a big spurt.
Yeah.
So otherwise, I think it's a good time to be aggressive.
And what's the portfolio allocation? How are you advising investors typically to diversify their portfolio across different asset classes?
So what we do is we diversify across products. We even diversify across geographies, actually. No harm in doing that.
Okay.
And we diversify according... So what we do is we prefer diversified funds. We don't take too many sectoral calls. Okay. We expect fund. So first off, I think we're in a stock picker's market right now. Okay. So what's going to happen in the next couple of years is you're the stock picker's market. I think you need to be sector agnostic. If you see the market play of 24 and 25, whatever buoyancy we've had, 25 not so much, but 24, it's been a play on India's macros. Okay, so if you see small cap, mid cap, and large cap, they've pretty much moved together in the last couple of years. So what's happened is this has been why India hasn't suffered too much, despite having a great 21, 22, 23, and valuations then having run up a little, is because our macros are extremely strong. So right now, our GDP growth is unmatched. Our inflation numbers are unmatched. Our foreign exchange reserves are close to $700 billion. I think that is the third or fourth largest in the world. So that has been completely unmatched. So what's happened is so far, whether you were in small, mid or large, it's been more or less similar. And I think going forward, it's a stock picker's market where we don't get into sectors. We don't take too much sectoral calls. Instead, you can diversify using geography.
Okay, fair. So let's understand the concept of a family office CFO. What is it that you're doing for clients? How has the response been?
See, when family office means apart from wealth management, you also help them with their taxes, their tax planning, and you also help them with their estate planning. So that is basically the thing. And some people also want to be helped with budgeting type of things and financial planning related things, how much they should spend, what they're spending is the right amount, etc. But when you use the term family office, you add tax planning and estate planning as well.
Okay. So you touched upon the consumption space as a whole as well. And given the fact that we are looking at the geopolitical situation that's playing out right now, there's tariff concerns, there's supply chain concerns. Where does India's domestic consumption story stand in light of that?
So what's happened is the recent GST cut that they did was actually done a little to offset the impact that we'd have on GDP by the tariffs, So I think India's domestic consumption is going to be a focus area to offset whatever goes on outside, So I think that's what's going to happen. Also with this whole thing with the tariffs and all, I think it's a huge chance for India to be a stable place while there's so much going on around the world, right? So India has this huge opportunity to be a place with policy stability. See, you spoke about 2030. If we execute well, we should be a $6 to $7 trillion economy by then. And what happens is when you reach that number, your growth in absolute terms is also significant and it's going to be felt much more on the ground and by industry. So I think this policy, luckily for India, 2% of our GDP is exports to the US. Okay, so we haven't been too US reliant. So I think domestic consumption is going to be a focus area. It's going to be a fallback area. And with regards to tariffs and everything that's going on, we can have policy stability And if we continue doing that for a few years, we can convince businesses around the world that India is a stable economy.
But won't we be impacted by the tariff imposition from the US quite significantly?
I think in terms of GDP, no. Okay. So these tariffs that we have also have a lot of exemptions. So the US has a huge lobby for telecom, for Apple products and things like that, for example. So they've managed to get that exempted. Our pharma is mostly generics, right? And he's put the tax on branded pharma. So that is exempt. And so I think the impact more than GDP is on a few labor-intensive industries. And because they're labor-intensive, I think many people's lives get impacted. Things like textiles, gems and jewelry. So the impact is more on people, on a few labor-intensive sectors. A lot of it otherwise is not going to be impacted so much. But one more thing. See, I'll tell you what's worrying. Global growth is worrying, apart from tariffs. So if you see IMF and World Bank projections of Europe, North America, etc., extremely worrying.
Okay. Let's talk about your journey as well. Can you tell us how you got into this industry, how you've reached where you have, and some key milestones?
So as I said, I have a co-founder, my father, and he was an insurance agent after the whole thing opened out. I started in 2009 by doing the CFP course. I was employed until 2016, which is when I started Arunasset from zero, from scratch. And we started as a company that helps people invest their money. Again, like I told you, the two main things are matching people's needs with market cycles. So if someone's a big fan of gold and they're a big fan of money, making good money, but
who isn't?
Yeah, right? So putting it in at 1.3, 1.4 may not be the best sort of idea. So matching those two things is really what we do. So our business has two main components. One is research, apart from marketing, ops, etc. One is research, and the other one is client relationship management. So those are the two things that we manage.
Okay. And what about life beyond work? What keeps you busy? Any hobbies?
Well, yeah, I love food.
Okay.
I like to travel. I watch a lot of football. And yeah, that's more or less it. I love watching and reading stuff related to economics, current affairs.
Any interesting books you read right now?
Oh, I don't read books. I watch. You can cut that out. Sorry.
Okay.
But I watch a lot, and that's I watch money TV.
Okay.
So yeah.
Good to know. So thank you so much. Lots of great takeaways. Thank you so much for joining us today.
Thank you.
All right. I hope you enjoyed that conversation of Market Pillars Uncovered. And do remember to stay tuned because we have lots more interviews with top market guests that we will be uncovering on the show. Like, share, and subscribe. And do remember to invest smart and stay informed. Thanks for watching.